It's cold here in Australia, which means it's the middle of winter, which means it's another tax season. Today I'm going to talk to you about how you can maximize your tax return, because I'm sure that's the question everyone wants to know. It's the question floating around all the social media. How do I get more money back this tax time? Well, let me tell you how. Hello everyone, my name is Ethan Rushok, and as I just said, it's tax time. It means everyone's getting their tax returns done again, which means people want to know how they can get more back, how they can maximize their refund, maximize their tax return this year. So what I'm going to go through here is a few different tips on how you can legally maximize your return, get what you're entitled to back, because at the end of the day, everyone wants to get every dollar that they're entitled to back, and there's no reason why you shouldn't be aiming to do that. So I'll jump right into it. The first thing, and it's a basic one I've talked about on my channel before, but claim all of your deductions. Everything that you're entitled to claim, make sure you're claiming it. Every dollar you don't claim that you're entitled to, you're missing out on reducing your tax liability. So we're now past 30th of June, so it's a bit late to say, oh, go and keep all your receipts. But go back and search for receipts you might have missed, and then put a system in place for this next financial year to make sure you're putting your receipts in a spot, whether it's stored online, whether it's stored in a shoebox, in a folder, in a system that works for you. That means you're going to calculate and include all of them. So this is the easiest way to maximize your tax refund, is by claiming more deductions, and they've got to be legitimate deductions, but don't miss out on legitimate deductions. Even if they are small, if they're $10 or $15, still include them, because this is going to increase your deductions claim, reduce your taxable income, and therefore hopefully increase the tax refund for you. Now, the next thing I want to talk about is something that's a little bit of a myth, but there are elements of truth to it, and it's the $300 limit. So if your total work-related expenses is under $300, you don't need to keep written evidence. So you don't need to keep receipts for it. Now, the problem is this is $300 total. There are a couple things that are excluded, such as motor vehicle and laundry allowance. So I'll put a list of them up here. But if the total of your other work-related expenses goes over $300, then you need to have receipts for all of them. And once you go over that limit, you have to substantiate all of it, not just the stuff over $300. So what this means is, don't go and claim, say, $600 of expenses thinking, oh, I've got the receipts for $300 and I don't have it for the other. If the ATO were to do an audit, they want to see receipts for all of that. The only time you don't need to produce that is if you're under $300 in total. There is another type of deduction the ATO don't want to see documentation for, and that's small expenses that are $10 or less, but they have to be under $200 total. So there's not going to be a lot here, but if there are small purchases under $10 and it totals to less than $200, then you don't have to keep receipts for those. My recommendation is always to keep receipts though, because even in these situations, the ATO will still ask you, how did you calculate that? So if you've got the receipts, it's easy to back that up and go, yep, this is how I calculated it because here's the receipts. Otherwise, you try and relay off the top of your head, and if you've forgotten how you've calculated, that could cause you some issues. The next thing I want to talk about is including everything, lodging on time, but not lodging too early. So what I mean by this is, you don't want to lodge too early when all your information's not there. If the ATO deem that you've deliberately not included information, so whether you had a second job and you didn't include that, or you had bank interest, and it wasn't available at the time with the ATO, they don't care about that. They know that you know what income you've earned, so you need to include it. And there's a chance you could get hit with fines and interest if you've deliberately misled the ATO. So I'm seeing a lot of advertising out there, especially from accountants, pushing you, get your tax done right now, right now. But if you haven't got all your information yet, don't get it done. And on the other hand, you want to make sure you hit your due date. So people are going to have a varied due date, depends if you're lodging yourself or through an agent, and your lodgement history. So typically the due date for people that are lodging themselves is going to be the 31st of October. So you want to make sure you hit your lodgement by that date. If you're going through an agent, typically it will be the middle of May. And again, you want to make sure you hit your lodgement by that date. The ATO do have the ability to fine you if you're late on your lodgement. So again, this is a part of maximizing your overall return, is by not getting fined by the ATO or not hitting interest because you've misled the ATO. This is going to obviously reduce the penalties and therefore make sure you're not getting hit with penalties and therefore maximizing your return. Motor vehicle is probably one of the biggest things that people forget they can claim. So you can't claim travel from work to home, but you can definitely claim work-related travel once you're at your workplace. So whether that's traveling out to clients, traveling between two jobs, traveling to another job site, they're definitely, if you're using your own car, not getting reimbursed for it, you can claim it. The good thing with motor vehicles, there are a couple methods. So there's the cents per kilometre method, where you can just work out it based on how many kilometres you've done, and you just need to keep some kind of written evidence of how you've calculated this. So it could be diaries, it could be a logbook if you wanted to go down that path just to keep track of your kilometres. It could be a spreadsheet. It can be as basic as that. And obviously, even if you haven't been tracking that along the year, you may be able to go back through your calendar and work out how many kilometers you did. Now, I did just briefly mention the logbook method. You can pick and choose which method works better for you. So the logbook method is a bit more strenuous. You have to keep receipts. In my opinion, if you're starting to go over $70 to $75 of motor vehicle expenses a week, and that includes your fuel, your regos, your repairs, then I would start to investigate the logbook method. It might not work best for you, but there's nothing wrong with investigating and just having a look and going, okay, I do a lot of work-related kilometers. I don't use my car much personally. I'm spending a lot on motor vehicle expenses. Maybe the logbook method will be right for me. Before I get into the next part of the video, I just want to thank you for watching so far. Make sure you've hit that like button. And if this is your first time here or your 10th time here and you haven't hit subscribe, please do that. It really helps me grow this channel. If you've been working from home, this is something else that people forget, but there's definitely a legitimate chance for you to make a deduction here that's going to help maximize your return. So we currently have 3 different methods here in Australia. So we have the actual cost method, which is based on the square meterage of your total house, and then working out what the square meterage of the work area is, and then apportioning your expenses based on that. It's not the most common method because it is a little bit confusing to calculate if you haven't got that stuff worked out. You have to keep a lot more records, and if it's not going to maximize your deduction, then you probably don't want to use it. The next method, which has been there for a while, is the fixed rate method. So that is currently at 52 cents per hour. So this is calculated on how many hours you work, and this covers for your electricity and gas costs, depreciation of your work furniture, so it might be your table or your chair. And this is really simple to calculate because you're working out how many hours have I worked during the year at home, times it out by the rate. The good thing with this one is you can still claim for things like phone and internet separately, but you do have to have a dedicated workspace in your house to claim under this method. So the third one is the COVID shortcut method. So this was obviously brought in due to the pandemic, and it's an 80 cents per hour rate. So that's obviously a lot better than the 52 cents rate, but this includes everything. So this includes phone, internet, electricity and gas, furniture, depreciation on computers, laptops. So you can't claim anything else related to working at home if you're claiming under this method. So definitely do the calculations on which method works best for you and use that. That's what I keep talking about through all of these deductions, is if we've got the choice of multiple methods and you're allowed to choose, make sure you use the one that's going to maximize your deduction and spend the time working out which one will put you in that situation. Now, before I get into the summary of this, if anyone is looking for someone, a new accountant to do their tax return, I do run an accounting business, Rushock Accounting. The link's in my bio. Chuck me a message in any of my socials. We charge $79 for a tax return this year. Extras obviously for rental properties and stuff like that, but definitely would love to help some of you out. So in summary, it's all about making sure you're claiming the deductions you're entitled to, using the right method that maximizes the deduction, and then making sure you've included everything income-wise, do things on time, therefore you're not going to get fined. And if you combine all these things, you will maximize the return you're entitled to. I want to hear from you. Have you lodged your tax return yet? I thank you for watching the video. Check out some of my other tax tip videos on my channel, and I'll speak to you again soon.